Jobs, jobs, jobs focused all the time, especially this week with the big jobs report coming out on Friday. Gary Burnison, the CEO of Korn, Ferry International, joins us live as our guest host for the next hour. We appreciate you being with us. Thank you so much. We're not talking about Lakers, though, which I know is what you want to talk about. It is very tempting. We would love, though, to get your pulse check. Being the leading executive search firm, are people hiring these days?
Well, they are. I mean, our business is up 75% over the last year, but it's it's tough. The last 16 weeks I've been in 13 countries, and as a global CEO, the lever of growth that you had over the past 3 decades you don't have, namely conspicuous consumption. And so CEOs, what do? Look to the east? Do you innovate? I think there's going to be more M&A activity actually over the coming months and quarters. But in terms of the job outlook, I mean, it's tough. I mean, there's really a bifurcated labor pool. There are those that have skills and then those that do not. And, here in the United States, we're looking at an unemployment rate, official and unofficial, of 17%.
Well, what are some of those trends that you're seeing in the C-suite or in the boardroom? Are you seeing more CapEx? Are you seeing more optimism, for that matter? Yeah,
it's interesting. We're doing the exact same thing that you see in, for example, the survey last week from CEOs. Only 30% of them plan to really hire over the next year. Yet, many of them are investing in CapEx. And actually, we're doing the same thing. Our business, if you look today globally, we're in 40 countries. We're about 8% off the peak, but we've got 30% fewer employees than we did. But we're investing in CapEx.
But you're looking at the glass half full, which is also what that survey said, that most CEOs don't believe in another recession or a double dip.
Yeah, I don't think there's a double dip turn in the road, and you have to, as a CEO, you have to find the silver lining, absolutely, and you have to find opportunity.
Gary, it's Anna here in London. Good to see you. Give us your take on the European economy right now. I understand that you actually temporarily moved your headquarters to Europe for a few months over the summer. What soundings were you getting from people you talked to here?
Well, we did, and I left, before I got the big tax increase. But I visited about 10 countries throughout Europe, and clearly it's kind of mixed. In the UK is faced with a big austerity program. Germany is relatively strong. France is okay, although they're trying to raise the retirement age and the like. And then you've got countries like Spain that are in difficult straits. But for us as an organization, we view Europe even today as a tremendous opportunity for our organization.
Gary, what about Asia? I mean, with the strong growth here and the faster growing emerging markets, are you finding that companies are not able to find enough people to help them grow?
Yeah, well, certainly, look, the world is, the axis has not just tilted, it's toppled. And as a global CEO, you do look to the east and you do try to tap that consumerism. And that's what we're seeing in terms of the labor pool as well. You're seeing Asian companies that are clearly global, that are looking for executives that can, motivate a workforce across the different cultures.
Are you motivating your own workforce? Are you looking to expand your workforce? We actually ask every CEO that comes on, and asking you feels a little meta, but are you hiring?
We are selectively, and I view this as, as an opportunity, right? I mean, that's what great companies do. They make their best moves in kind of uncertain times, and these are clearly uncertain times, and that was our orientation since the Great Recession started. So we did 3 strategic acquisitions over the last 2 years. And so, yeah, we are investing for the future.
And we'll talk about those acquisitions. We'll talk about many more things. Perhaps basketball will trickle in. Who knows? We have a whole hour to talk to Gary Burnison, the CEO of Korn, Ferry International. If you have any questions for Gary, you can email them. Will you take them?
Absolutely.
Worldwide at CNBC.com, Anna.
Still to come, we'll bring you the latest from the EU-China summit that's taking place in Brussels today. Will it be a blaming game, as China is now urging the EU to treat the yuan exchange rate issue as fairly and objectively as possible? More when we come back.
On CNBC.com now, Asian stocks are just at the start of their bull run. That's what a fund manager told CNBC. And stocks are much cheaper now than bonds, and buying bonds at this moment would be a mistake. That's according to legendary investor Warren Buffett. And is Ben Bernanke sending bears back into hibernation? CNBC.com considers the outlook ahead of the expected easing measures coming from the Fed. Find out more about all of these stories only on CNBC.com.
Welcome back to Worldwide Exchange. Europe has joined the US in urging China to allow its currency to appreciate at a faster pace. Ahead of an EU-China summit in Brussels today, policymakers and central bankers have voiced disappointment at the lack of change in the yuan's value since a commitment by the Chinese authorities in June to make the currency more flexible. Carolina Chimenti has more for us in Brussels. Carolina.
Anna, what is interesting to say is that these bilateral meetings by the European Union with many other countries are not the most exciting kind of meeting. That's why President Obama didn't participate on one earlier this year, back in May, that was supposed to take place in Spain, because in fact the practical results of these meetings are sometimes disappointing. Let me tell you what happened on the past meetings, bilateral meetings between the European Union and China. For example, they created the China-Europe International Business School in Shanghai. They created a law school in Beijing, also Europe-China Clean Energy Center in Beijing as well. Lots of investments, like millions to create schools, millions to create this Institute of Clean Energy. But in fact, political decisions are not exactly what happened in these meetings, especially because the European Union doesn't have a common foreign policy, especially not with such an important partner as China. So very difficultly they are going to hear something like, okay, China will agree on reviewing its fluctuation currency in the markets. We already heard the Prime Minister of China yesterday when he had a meeting with the President of the European Central Bank and other economic leaders of the European Union, saying that he is not actually putting emphasis right now on re-evaluating the yuan, but on having a stability in the currency market. So it's very unlikely we are going to have an exciting announcement at the end of this meeting later on this afternoon here in Brussels. Back to you.
Carolina, thank you very much for that. Carolina Chimenti there in Brussels. Well, Joseph Stiglitz has warned that the flood of liquidity from the Federal Reserve and the ECB is throwing the world into chaos. The Nobel Prize-winning economist says ultra-loose monetary policies are bringing instability to the foreign exchange markets and are forcing countries like Japan and Brazil to intervene to protect their exports. Stiglitz also said that easing measures are doing nothing for the US economy and that the country needs fiscal, not monetary stimulus to pull out of the crisis. Billionaire investor George Soros agrees with Joseph Stiglitz, saying Europe does need more fiscal stimulus, but his argument is in opposition to cuts in spending. In a speech at Columbia University, he blamed Germany for leading the implementation of austerity measures and said that cuts would only push the Eurozone into a deflation spiral.
Deficit reduction by a creditor country such as Germany is in direct contradiction of the lessons learned from the Great Depression of the 1930s. It's liable to push Europe into a period of prolonged stagnation or worse.
Let's get out to Sylvia Vardva. She's in Frankfurt for us. And it's interesting, George Soros there was drawing on the experience, the US experience of the Depression and the deflation experience there. But of course, Germans remember something very different, and that's hyperinflation.
Yes, exactly. Maybe we just have different memories and different types of angst in our genes. We lost our wealth 3 times, twice by hyperinflation and twice by war, which also led to hyperinflation. So maybe it's different experiences. But I think the bottom line is the jury is still out on what helps us. Should we now push for further fiscal stimulus, drive the deficits up? That was kind of, in a way, the Greek way. Or is it trying to suggest that some of the good eggs, the still good eggs, in this euro basket, like the Germans should at least drive their deficits up, so by the next time somebody gets into crisis, like Greece, like Spain, like Portugal, like Ireland, even the Germans can't pay for it. I think we're all caught between the rock and the hard place right now. This austerity must come. What they're arguing, the likes of George Soros are arguing about, yeah, but it's not the right time. Well, let's face it, it's never the right time. We always want to grow ourselves out of the crisis by more spending, by doing more of the things that we shouldn't do, and after that we hope we can put them right. But the mountain we're trying to move before us gets higher and higher. Maybe we just have to suck it up and have a bit of a recession before we finally get out of this. But I think it's almost a religious argument right now. Should you step on the brakes and risk the recession, or should you overspend and try to grow yourself out of the recession? And maybe the real way is, or the best way is, one half of the world tries to grow themselves out and the other half doesn't. We'll have to wait and see what happens.
Thank you very much for that, Sylvia. Well, let's go from the part of the world that perhaps needs to put on the brakes to the part of the world that wants to grow itself out. Sejal is over in Singapore, and she has the latest on what's happening in the Asian market stage.
Yeah, Anna, you know, with the BOJ moving, I guess this thinking that other central banks are going to do the same seemed to be spurring the rally here in Asia. And I want to continue on the Nikkei, which extended its rally today, in fact, closing at a 2-month high after BOJ did that surprise rate move. We talked about that fund that they were setting up to buy a number of assets, and real estate investment trusts were one of them. We saw a continued rally in some of those real estate stocks today, hopes that this is going to help that sector recover. If you actually look at the real estate investment trust, they've lost about 2/3 of their value since the peak of 2007, April 2007, because they've had a hard time raising money to buy more properties. And the thinking is that might change now. So good gains there. As for the dollar yen, well, we saw it rally a little bit yesterday, pulling back a little bit today. So we actually had a bit of a mixed picture when it came to the exporter stocks. Now, one stock that actually did well, Aeon, which is Japan's second biggest retailer, coming out with very good numbers, a 50% jump in Q2 operating profit, and the number was $485 million. They saw some really strong summer sales, been doing a lot of cost cutting, so that helped. I think the big surprise was they also raised their full year forecast for this year as well, above market expectations, expecting now 1.8 to 1.9